Hi friends, welcome to new video. Shares of Silicon Valley Bank, SVB, a major lender to technology startups, fell on Thursday as investors moved to withdraw their deposits. The slide came a day after the bank announced a $2.25 billion, £1.9 billion, share sale to help shore up its finances. Shares in banks around the world fell, with the four biggest U.S. banks, including JP Morgan and Wells Fargo, losing more than $50 billion in market value. A venture capitalist told the BBC that the day's events were wild and brutal. Stock markets in Asia also fell on Friday as shares in banks fell. Shares in SVB saw their biggest one-day decline on record as they tumbled more than 60% and lost another 20% in after-hours trade. My name is Matthew and you are watching 72 Info TV, so before we discuss this news, subscribe to our channel for more info videos. The firm launched the share sale after losing about $1.8 billion as it offloaded a portfolio of assets, mainly U.S. Treasuries. But with respect to the bank, some startups with deposits have been advised to withdraw the money. Hannah Chalkowski, founder of financial technology investment fund Blank Ventures, told the BBC the situation was wild. It advises companies in its portfolio to withdraw funds. It's crazy how it opened up like this. Interestingly, it's the most startup-friendly bank and has supported startups a lot through COVID. It's brutal, he added. A leading lender to early-stage businesses, SVB is the banking partner for nearly half of the U.S. venture-backed technology and healthcare companies that listed on stock markets last year. SVB did not immediately respond to the BBC's request for further comment. In the broader market, there were concerns about the value of bonds held by banks as rising interest rates made those bonds less valuable. Central banks around the world, including the U.S. Federal Reserve and the Bank of England, have raised interest rates sharply as they try to curb inflation. Banks hold large portfolios of bonds and are sitting on significant potential losses as a result. Bonds held by banks are not necessarily depreciated unless they are forced to sell them. But if, like Silicon Valley Bank, lenders have to sell bonds they hold at a loss, that could hurt their profits. Ray Wine, founder and chief executive of Silicon Valley-based consultancy Constellation Research, told the BBC that rising interest rates had hurt banks. Nobody at Silicon Valley Bank and a lot of places thought that this rate hike would last this long. And I think it did. They bet wrong, he added. Thanks for watching our videos.